Good time to bring in Manav Chopra, Head of Research Equity at India Bulls Ventures. Hi Manav, good afternoon. What's the call that you're taking on the index after yesterday's run-up? Looks like the markets are taking breather today.
Yes, exactly. In fact, the markets have seen a very good bounce back from its oversold levels, and after a series of declines, the markets have managed to sustain above its long-term averages, and after positive divergence, which hints for a good short-term bottom in place. So I believe, as long as Nifty sustains above the levels of 10,200, the markets would be inching higher, and we could see the levels of 10,450 on the immediate basis, and 10,600 is definitely on cards. And we've seen such kind of patterns in the recent times, when the markets have declined without any sustained retracement rally. So I think one should maintain a buy on dips approach, because I believe this rally would have a good legs on the upside, and I don't see any immediate correction into this, but we could see a sustained upside move towards 10,600.
Manav, the Nifty Bank the last couple of days has been outperforming the benchmark indices, or the Nifty, with reason of course. Not a big outperformance today, but about 0.25% on the back of this almost 3% move that we had yesterday as well. From a perspective of somebody who's already long on the Nifty Bank, would you advise carrying home the long positions into the weekend, or is it a good idea to take some money off the table?
I think looking at the current levels, one can definitely continue to hold their long positions. Neeraj, after a good long time, Bank Nifty has actually exceeded its 2 weeks highs and has taken support at its 2 years rising channel. So, even at the current levels, the risk reward ratio definitely looks quite attractive. The bank index still has an upside towards the levels of 25,500, which is the levels which is only a brief 38 point levels of where Bank Nifty could see a rally. And also we haven't seen any good retracement rally. So I think after a good cycles, when we count the and take these cycles into the play, I think at least for next couple of weeks, bank index could see a good upside momentum.
Manu, what about the individual stocks that you're recommending today?
Yes, my first buy call is on Titan. The stock has been in a very good uptrend, and it has been continuously forming a series of high tops and bottoms. And also today on the intraday charts, there has been a good breakout that has accompanied by volumes. There is a strong support for Titan at the lower levels, which is close to the levels of 920. So recommend a buy into this with a stop loss of 910 and expect the high targets of 990. My second call is on Bank of Baroda. From the PSU banks, most of the banks have been forming a base at the lower levels, but Bank of Baroda recently has formed double bottom pattern on the daily charts, and has also managed to close above the important levels. Looking at the weekly perspective, this stock seems to have bottomed out for at least next couple of weeks, and also provides a good risk reward ratio. So this stock is a buy with a stop loss of 144 and expect an upside target of 165.
Interesting. A public sector bank and a consumption name which has been knocking on new highs. Titan. It's actually been the last 2 or 3 months have been about a Titan, a Jubilant Foodworks, and Avenue Supermarts related to consumption directly or indirectly. These are the names which have done extremely well over the last 3 odd months at least, if not more. Anand Tandon Johnson, market expert, joins us on the show. Anand, good afternoon. Thanks so much for taking the time out and being with us on Bloomberg Quint. The last that I spoke, and I was on a bit of a holiday, so I haven't spoken to you for a while now, but the last that I spoke, you were bearish. Now, some bit of water has passed and under. The RBI's commentary has come out. Their inflation forecast has been benign as well. Does that temper your bearishness a little bit from what it was earlier?
Well, they are more than their commentary, I think, which is, I don't think that the inflation is going to be benign at all. I think, you will find inflation going up. But the real effect that RBI has done is that it has infused some liquidity into the market and has managed to cool off the interest rates for near term. So for that provides some immediate relief. It doesn't, however, change the overall context in which we are operating, which is that, you will get an interest rate hike going forward. If you look at, for example, some of the data related to, for example, the inflows into the market, not only into the equity market, but generally the current account deficit and the capital account that we have, you'll find that there is some huge payments being made going out of India, and that is going to put some pressure on the currency. So even from that point of view, I think interest rates have to move up towards the second half of the year. So the real issue is that near term there is some relief because of the cooling off of interest rates. We continue to remain at the mercy of global markets. If they continue to remain volatile with a bias on the downside, which is what I see right now, I think we will also follow a similar pattern.
Anand, the bond yields have cooled off substantially from those high levels that one saw in the month of February, and that's after some measures that RBI has taken. They've allowed the banks to spread across their bond portfolio losses in the next 4 to 5 quarters, and a couple of other measures as well. Do you think in light of all that, we've seen some bit of buying actually coming back in a couple of the NBFCs? Is this the space there where money can be parked in now?
From the financial sector perspective, I think I would imagine that the bet now will have to shift more towards the corporates. I mean, we are really betting on the fact that there is an revival in earnings in this year. There are some small incremental moves towards a little better order book for many of the engineering companies. We are beginning to see some early signs that project revivals are beginning to happen, all of which will mean that the corporate lending book has to start doing better. Also in terms of valuation, that is where the biggest hits have been taken. So assuming that there are no more cockroaches coming out of the balance sheets, corporate facing banks are likely to be a little better performing in my view, and rather than the consumer facing banks. I think there is huge growth in consumer credit, which is going to put pressure on margins, and while the market doesn't seem to recognize it yet, the valuations that they are paying factor in a continued growth, which to my mind seems a little tenuous to believe.
Okay. Anand, the last of, just carrying on with the point that Navneet made, whether due to the bond yields or due to the oversold nature, but we've seen a clutch of quality private sector NBFCs come back. Bajaj Finance is a case in point, but a clutch of others too have moved back. Now, it is anybody's guess as to when is it the hike would coming in. I mean, let's work with an assumption that there is a hike coming in, but there's a prolonged pause in between. Keeping that in mind, and if that is a determinant, I don't know whether it's a determinant for you or no, but if that is a determinant or if some other factors impact your decision, what would you be doing with the NBFC space, particularly the large cap names?
As I said, I think I prefer corporate facing banks at this stage rather than the NBFCs. That said, there is a little while back, there was an argument being made that PSU banks are being recapitalized and consequently they will take away market share from NBFCs. Clearly that fear is out of the way. It is very unlikely that the level of recapitalization will allow most public sector banks to grow, much less take away space of the NBFCs. So to that extent, that fear has proven to be wrong. NBFCs can continue to grow. However, as I said, it seems to be too much of easy money, and the valuations at which most NBFCs are trading doesn't leave you much comfort for anything that happens on the downside. Especially if you look at the microfinance sector, for example, that is trading at astronomical valuations in my view. The rest of the NBFCs like Bajaj Finance, etc., are obviously very expensive, but at least you can hope that their level of due diligence and lending book is far cleaner, and you're not likely to get any bombs along the way. So if you have to be in NBFCs, then you might as well stay with the larger companies. But as I said, I think incrementally you are more likely to make, in my view, better money looking at the corporate banks rather than the consumer side.
You think Ujjivan and Equitas are trading at astronomical valuations, Anand?
So, the problem with microfinance companies and, even banks which are similar is that the assumption is that you will continue to grow at the rate that you are. That assumption, to my mind, means that, in the next 5 years, you and I will also be taking microfinance loans because you'll run out of people to give loans to. By and large, the valuations look cheap because of the growth rate factored in, and the credit cost somehow is taken as one-off. So you assume that, if you lend money to someone who doesn't have any track record of borrowing, has no income, has no assets, and probably doesn't have any history behind it, that is 100% secure and will come back. Whereas if you do a secured loan, that is most likely to become an NPA. So it's just the stage of the market. As I said, my personal preference is to look for slower growth and not necessarily very aggressive growth when it comes to lending.
Okay, that's the view coming in on the NBFC space. Stay on with us, Anand, while we get some more technical check on the markets going. Sarvendra Srivastava, independent market expert, is joining us on the show now. Sarvendra, we had a bounce back coming in yesterday. Are you changing your stance of maintaining that level on Nifty of 9,700?
Yeah, very good afternoon. I think on the back of this bond yield cool off, I think definitely this one is more than expected. You would have expected Bank Nifty to probably halt at 24,500, 24,600, and for the Nifty 10,250 was a number to look at. So since that we have slightly gone ahead and done a little more, you would say that yes, the ranges are still there, but we are now at the tipping point. So if we are just at that tipping point, so with bond yields cooling, and if the market was to follow through on Monday as well, then we will have to sit up and take notice as to, are we doing 9,700 from here only, or probably we are bouncing back towards 10,500, 10,600 and then falling. So that is the question. I think the answer I don't have today, but my sense is that if we follow through on Monday, then probably we are headed towards 10,500, 10,600 before any further correction happens on the market. But if we stop here, then I think because of whatever events and whatever news, we've done a little more, but we are still within limits. So probably if we don't follow through on Monday, then we can probably start another leg down from here. That is the pattern setups which are there right now. But any bit higher, and then you would say that probably 10,500, 10,600 is coming. So I would say right now that 10,100 to 10,350 will be the range for Nifty, and I'll kind of stay away and not add positions here. Wait for some clarity either up or down, and then probably take that trade. But yes, if 97 definitely is open, as long as you don't have a decisive breakout past 10,600. In between you can do these bounces, and in between you can do their little moves. But yeah, 10,600 is the main number that I'm looking at. If at all the trend has to reverse, then 10,600 is the number to look at, and in between everything is a trading opportunity.
Okay, so no trade on the index, Sarvendra, but what about individual stocks?
See, looking at what financials are doing, I'll probably go and pick a couple of names there. The filter being, as I said, look at those names in the financial space and see from those NBFCs. The first one is Equitas. I think there the stock is now bouncing back above the long-term 200-day averages. Probably the bounce could extend all the way till 165, 166. So a buy on Equitas. These are spot levels for a target of 165. Stop loss kept at 142.40. Similarly, another financial name from the banking space, KTK Bank, look to buy there as well for a target of around 136, keeping a stop loss at 118.90. And the last one is a sell on CET. This stock has bounced back and done a decent bounce, tested its 200-day and finding some hurdle, some resistance there. So I would want to short sell this for a target of around 1601 on the downside and keep a stop loss there at 1,666 on a 5-minute closing basis.
Okay, thanks Sarvendra for those. Anand, coming back to you, we're just talking about growth, and I don't know what the market is pricing in when it's giving the valuations that it is giving to Jubilant Foodworks, but the stock has been on a tear. Yes, the delivery over the last 6, 9, 12 odd months has been fantastic, but are you comfortable paying such a top dollar to Jubilant Foodworks, or if you had investments there, you would skim some of those?
Well, that is a sector which is currently very much in favor, and obviously Jubilant has delivered in terms of same-store sales growth quite above market expectations for the last couple of quarters. Do I want to chase that kind of valuation? The answer is no. But at this time, I think the market is not looking at valuations at all. The market is looking for growth, and Jubilant is one of the few companies which is delivering that kind of growth rate in the consumer space. So therefore, the market is willing to pay any kind of price for it. For the near term, it looks like they will sustain that growth rate. So I don't see a trigger that will bring the stock down. But if you're looking at valuation, obviously it's very difficult to justify.
Okay. And in the last few days, we've seen select media names come back in favor. The last 1.5 months in particular, some of the distribution companies have seen some very interesting buying as well. Some anchor names being out there, yes, but a clutch of bulk deals in the DEN networks, Hathway cables, etc. I'm leaving out a Dish TV out here, the DTH players, but maybe you could include those as well. Is there merit in this pocket? It's a pocket that has been ignored, maybe for the right reasons, but been ignored by the market for a really, really long time now. Can it come back to favor?
I think between the distributors like DTH versus cable, I think the swing is coming back towards cable, interestingly. While DTH took over the initial flurry because of the fact that they're better quality, easier to penetrate, and therefore was able to get to places where the cable was rather patchy. The reality is that today you are looking at internet being a major play, and internet-based distribution of media and media consumption being a reality. So the biggest advantage that cable has is that they can actually deliver cable internet as well, whereas Dish or a DTH player cannot do that very easily. So therefore, to that extent, the fact that you are looking at a per subscriber basis valuation, you would find that there is obviously greater value in some of the cable companies, especially if they are more than just a deliverer of television, but they can also deliver internet. And I think that is what will drive the excitement for near term. However, I think on a longer term basis, those which are the media creators and the content providers are where the value really is, because after all, they are the ones who drive the ARPUs and drive the eyeballs to a particular channel. So I think if you have to be in media, that is probably where the actual value lies. But obviously on an incremental basis, if you have suddenly discovered that you want to look at subscribers, then the cable companies are a little better than the DTH companies.
Well, let's find out from a cable company as well. Anand, much appreciate you taking the time out and being with us today. But we just take that point that you made forward with DEN Networks, because the management is joining us on the show. They're, of course, expanding into a bunch of activities as well. Recently, a clutch of investors have come in. Norway's pension fund has hiked stake in DEN Networks as well. Lots to talk about with the management. Joining us on the phone line is Chief Executive Officer of the company, Mr. S.N. Sharma. Mr. Sharma, good having you. Thanks so much for joining in. Actually, before I get to the tariff order guidelines and what's happening with investments, etc., just a flavor of how business is looking like the last 6 or 9 odd months. How has been the subscriber addition? What's been the cost factors at play? Can you give us an overall outline?
Yeah, as of now, we have on consolidated basis, we have 8.5 million subscribers making payments to us in different phases, spread across 13 states of the country. And our ground ARPUs are constantly increasing. Revenues are going up. Quarter-on-quarter basis, there is a growth of 6% on an average. Quarter 3 EBITDA was 81 crore rupees. So overall, the business is looking all set to move in a positive direction. The roadblock was getting the fair share of subscription income from the subscriber. That roadblock has been long taken away. Roadblock has been broken, and now our cable partners are sharing subscription as per the regulation with respective MSO. So overall, the space is looking very good. And going forward, there is enough headroom to increase our subscription in phase 3 and phase 2 towns. And 50% of our universe operate in phase 3 towns. So I would say in next 1 to 2 years' time, phase 3 today stands at 70 rupees ARPU. It's going to cross 125 in next 24 months.
Wow. So you would expect that over the next 24 or 36 odd months, when the ARPU goes up, to the number of active subscribers would move up dramatically as well because of phase 3?
See, as far as our existing universe is concerned, we operate in a analog digital put together. We estimate that our subscriber base is close to 13 million households. A lot of phase 3 and phase 4 universe is yet to be digitized. But you can say in next 12 months, we'll be seeding close to 6-7 lakh of additional set-top box, and overall the number should not go beyond 12.5. That's my personal estimate.
Mr. Sharma, good afternoon. Yesterday in the exchange release, the company has highlighted that you're looking to leverage your existing cable infrastructure across India by expanding your broadband internet services to almost 100 cities in this calendar year. Could you give us more information about it? Are the pilot projects already started? By when do we get to see the first phase getting completed?
Yeah, as we have been doing cable business, the upgradation in network has been happening. It started with coax cable, which is now converted into fiber optic cable across the country. And 90% of our cable network is fully fiberized. And 70% of network of my cable partner is also fiberized. So my fiber optic has reached is close to 100 meters distance from any household that we are covering. So that gives us enough space to deliver data by augmenting this existing infrastructure by putting in small devices wherein the investments are not of high magnitude, and that will facilitate enabling broadband into various houses that we are already operating. Here in the journey, I'll be ensuring that our cable partners also participate equally, and for the back end and for the delivery of service up to cable operator, it will be our part of the job, and carrying it further to the subscriber home is going to be handled by the cable partners. But the whole business will be conducted under our license. The subscription invoice will be raised by DEN networks, and collections will be online directly coming to DEN. Based on the understandings reached with the cable partners, we will be allocating fair share of revenues to them based on the tasks and responsibility plus the investments made by each franchisee of ours. So this is a general model. As of now, we have already conducted successful operation of 10 cities in country, and rollout has started happening in another 15 cities. So in next 1 year's time, we plan to cover 100 odd cities.
What's the, I mean, the numbers sound fairly decent, and it almost seems that there could be a hockey stick effect that could come into play here, Mr. Sharma. Can a successful implementation and a successful execution and hopefully successful acceptance of what you're trying to do lead to a dramatic jump in revenues for DEN over the next 3-4 years?
Yes, you got me right. The success story will be driven by the execution that the team conducts. It's entirely based on infrastructure is already. We have the backend in place since we already are serving close to 2 lakh broadband subscribers. We have the sufficient gadgets and a strong backend mechanism. The servers of various facilities like YouTubes and Facebooks and all those people are already lying in our backend. So I'm pretty sure of enabling and ensuring that we do the project successfully. And the choice of these 100 towns also has been made after considering variety of inputs, depending upon the paying capacity of these towns and the kind of cable infrastructure that we have and the cable partners we have in this town. So I'm pretty sure that the whole thing will lead to huge upside in the revenues of the organization. And looking at the tariff war that is undergoing and in wireless broadband service, over here our projections are based on the 550 rupees ARPU for 20 MB to 50 MB speed services, and data consumption will be permitting up to 50 GB.
Okay, I mean the belief...
And then there will be a variety of packages and different technologies will be brought into place depending upon standards laid down by us and depending upon need of a town. And we will be prepared to meet the speed requirement of 2 gig up to.
Wow, the belief really is that the big elephant in the room will take away the lion's share and the others won't be able to. But if you can share some estimates, I don't want exact numbers, Mr. Sharma, but maybe in percentage terms or otherwise, that if your current revenues were to the tune of 100, how much can this, over a course of 2 years or 3 years, add to those revenues? How much over 100 in terms of a number can this, almost the second line of business, add to your top line?
Let's talk after a month or two to elaborate on these statistics. Right now, I am also traveling. You got me at a wrong hour, and definitely I'll be very happy to share these statistics.
Maybe you'll be able to tell me one of this question as well. I believe, just wanted an update from you as to when are you expecting the tariff order guidelines from TRAI, because I think the matter is delayed, but maybe you have some sense of the timelines?
Last I heard that Supreme Court gave a direction to Chennai High Court to conclude proceedings in 30 days to 40 days. And if by any chance it's delayed beyond June, then speaking order as per Supreme Court was that July they will take seizure of the matter and they will start hearing the matter out in the court. So in all good estimate, overall it should not be taking more than 3 to 4 months from here on.
Okay. Mr. Sharma, are you traveling for the road show in Chennai? Because I was just looking at the press release. I guess today you had a road show.
I am in Chennai only. You caught me in between two meetings. So
are you looking to get any new investors on board?
You heard somebody yesterday.
Yes.
You will keep getting more and more inputs.
So you are looking to get more and more investors on board.
That's not a real focus area for me. But we keep updating people. We keep pricing them, and it's up to us, up to them to do the needful.
Okay, if I can just slip in one last question. Are you looking at an active fundraise to fund any of these expansion plans that you may have over the course of the next 6 months?
For this broadband expansion, we don't need any fundraise.
Okay.
It all will be happening. It all will be happening from internal accruals only.
All right, Mr. Sharma, appreciate you joining us today and taking us through that update on what's happening with DEN networks. What can one expect in the new financial year? Well, it's time for us to slip into a short break here on Countdown. But on the other side, we get you the Fab 4 stocks of the day at 3:15 p.m. We also get you what the dealing rooms are recommending in trade and some closing strategies from our technical experts. Stay tuned.
By the way, there's a bit of a bounce in the markets, and we'll talk about that as well. But first, to some other news before we move full tilt back to the markets. Day 2 at the Commonwealth Games saw 2 more medals for the Indian contingent. Sangeeta Chanuk bagged a gold medal in the women's 53 kilos weightlifting category. She also set a new record in snatch by lifting 84 kilograms. And it was a bronze medal for 18-year-old Deepak Lathar in the men's 69 kg weightlifting category. India's tally at the Games now stands at 4. A proud day for the Indian athletes. I must say, before we go to Yash for Fab 4, just look at the markets, look at the Nifty Bank. That's had a bit of an uptick in the last few minutes of trade, 135 odd points in the morning. Remember, a couple of our experts, including Raja, had mentioned about going long on the Nifty Bank from an intraday perspective. You made some money if you indeed went there and your stop losses didn't get hit. But Manav, I just wanted to ask you, with this uptick that we're seeing in the last few minutes of trade, is there a trading opportunity if you're brave enough to carry your trades overnight in the Nifty Bank?
Of course it is. See, if you're looking at the Bank Nifty chart perspective, like I said, after 2 weeks, Bank Nifty has managed to sustain and give a close above the levels of 24,500, and it is closing by a very good margin here. So I think going forward, I would not be surprised to see levels of 25,100 on immediate basis and 25,500. For anyone who's holding the long positions, a strict stop loss of 24,700 can be maintained. So even you have a good risk-reward ratio. And looking at the overall formation, the bounce back that we've seen is backed by good, buy from the oscillators front. So I think looking at the PSU banks, how they have bounced back from the lower levels, I think I would not be surprised to see at least 8 to 10% rally in PSU banks in the next couple of trading sessions. So I think Bank Nifty, since it has underperformed since quite few weeks, but in looking at the momentum in last 2 days, will not be surprised to see Bank Nifty could be the index that could take the markets higher.
Okay, Bank Nifty currently at day's high, but let's go across to Yash Upadhyay to find out which were the Fab 4 stocks of the day. Hi Yash, good afternoon.
Good afternoon, Navneet. So first up, we have Soba Developers. Now this one has surged as much as 11% today after the company reported its best ever sales in the last 12 quarters. Now their new sales volumes grew by as much as 40%, coming in at just a little over 10 lakh square feet. Realizations too improved by 7% on a year-on-year basis. The pharma pack was buzzing in trade today. Lupin had surged as much as 7% after the company said that it has received the Establishment Inspection Report or the EIR report from the US FDA for its Pitampura Unit 1 API facility located in Madhya Pradesh. Balarpur Industries is up as much as 5% today after the company said that it has entered into a deal to sell its Malaysian unit Sabah Forest Industries for a total consideration of about $310 million. And finally, we have an interesting name over here, Navkar Builders. Now, this is a small cap name, has a market cap of just 42 crore rupees and has done a top line of just 40 crores in FY17. It's locked in an upper circuit of 5% today after the company said that it has received an order worth 211 crore rupees for a sewage treatment from the Bhopal Municipal Corporation. Back to you guys.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. But on to the chart of the day now. NBCC has been beating analyst estimates consistently through the last financial year. But its valuation may be a cause of bother for some. Nikki Mirchandani joins us with more details on that. Nikki, over to you.
Thank you, Navneet, for this one. Well, most of the infra stocks have actually surpassed analyst expectation. But then one stock which deserves a mention is NBCC. Now, this particular stock has surpassed analyst expectation or the target price by at least as much as 15 times over the last 1 year. That you'd see the yellow bar that you'd see is the number of times the stock has outperformed the target price tracked by Bloomberg. That's almost 15 times and almost highest as compared to rest of its peers. But then if you look at the valuation, they appear to be on the higher side. It is trading at a 1 year forward PE of 34 times, which seems to be at a premium of roughly good percent or a good margin as compared to rest of the peers who are trading at a 1 year forward PE between 20 to 25 times. So what explains this high valuation? Well, Antique Broking attributes NBCC's outperformance to the all-time high order book level, which currently stands at 800 crore and also implies a compounded annual growth rate of a roughly 47% over the next 5 years as compared to 20% that the company has done in the last 5 years. Besides that, we'd want to know if there is a further upside. Well, 10 out of 13 analysts tracked by Bloomberg suggest a potential upside to the stock and target a price of nearly 25% from the current market price. Back to you guys.
Well, thanks a lot for that, Nikki. So that's with regards to NBCC, has done reasonably well over the last 12 odd months. Actually has done really well over the last many years. Deepak Shenoy, founder and CEO at Capital Mind, joins us right now on the show. Deepak, good having you. Thanks so much for joining in. These days we hear a lot of these pseudo-infra plays, though NBCC probably won't qualify as an infra play, but more as a converter. But a clutch of infra companies doing really well. Yesterday we had Dilip Bindkon in the studios, and he was talking about how his margin profile will stay at 17-18%. His order book gives him visibility for 4 or 5 years, and there is reduced risk on projects because of the HAM nature of the projects as opposed to the BOOT earlier. There seems to be a different breed of infrastructure companies out there for investors to bet on.
Good afternoon, Neeraj. I think there is, a change in the whole infra philosophy. Two things have changed. First of all, the build, operate, own and operate and then transfer model has, I think, from a public-private partnership perspective, more or less corrected itself in the sense private players were not able to really secure funding for a long term. But now they're getting paid on more of a project basis, so that's easier to handle. Second of all, there is a change in some of the infrastructure guidelines. So when infrastructure companies get paid, typically it would go into a lot of litigation, and the litigation would be simply because the officials did not want to be known as having paid out without resistance of some sort. So the arbitration law now says that if arbitration gives you a certain payout, then the payment is made of at least 75% of the amount under arbitration, and then the remaining 25 is retained until, because after arbitration it still goes to the high courts. So these two factors have actually helped the unlevered, relatively low levered businesses from KNR Construction to Dilip Buildcon to a slew of players, and as a disclosure, we own some of them. They've managed to kind of turn around quite substantially on the book. So very exciting times for some of them, but the old favorites of GVK and all that aren't getting anywhere close because they still own some of the older projects.
Okay, that's the view coming in on the construction space. Pull up the intraday chart of Shakti Pumps. That's seen a sudden surge in the last half an hour or something. The intraday chart will give you a better picture. And on YTD basis also, the stock's been giving good returns. It's up 14 to 15% as we speak. And the YTD chart will tell you it's outperformed the markets. In fact, it's up over 40%. Deepak, do you track Shakti Pumps?
Yeah, we own it from a momentum perspective. It's been doing really well, and I have I can't reveal much more right now, but there is a tremendous amount of interest in the stock. The stock's done really well. We're interested in the space substantially, but as a disclosure, because there is some kind of conflict, I'm not going to speak a lot more about it at this moment.
Okay, Deepak, what's the sense on the consumption names? We've been talking to almost every guest about Jubilant, but there is something beyond that too, right? Titan has had some fantastic moves. Avenue Supermarts continues to make money. Suddenly we see, V-Mart Retail and a couple of these retail names as well clogging in new highs. Trent is almost at new highs as well. What's happening here?
Trent actually did make a new high today, and so did. So I mean, we are very excited about Titan for multiple reasons. The consumption story, the high-end consumption story, is captured by Titan. The low-end consumption story is perhaps by D-Marts because of the groceries. There's a lot of the mid-end consumption players also. I think this space is getting a lot more excitement because India. If you look at the top 50 companies in India, there's hardly any retail or big consumption story apart from Titan that's sitting in there. So the biggies, most of the large indexes around the world tend to have some large retailers sitting in. From the US, there's Walmart and a bunch of others in the UK and in Europe as well. So India is going to get one. We don't know which one. The thoughts have been around Future Group, around D-Mart, if it scales up, and a couple of others. But I feel right now the space is quite expensive, but the consumption story is huge. Titan in specific is something that's exciting from both a momentum perspective. The price momentum is fantastic, and also from the fact that so many jewelers have gotten caught into all these frauds that because they weren't running great governance, and there's a lot of insider dealings and bank collusion with bank officials and so on. So Titan kind of stands out because it's relatively clean, and you get a lot more potential from there. They're also getting into more of the high-end branding products like fragrances or perfumes, like bags, and apart from the watches and jewelry that they're already in. So owning high-end consumption and owning that as one of the players who will benefit from the fact that the rest of the competition has been beaten up because of the detection of frauds and the shaking up of this industry. I think Titan stands a huge chance to move. It's very expensive as a stock, so one has to consider that the bet here is that the growth will be massive, and based on that, that's the kind of story that we like, at least from a consumption point of view. I think that part of the story will continue to grow.
Okay, stay on. So much more to talk about, and we'll take in some questions with Sarvendra as well about what to do in a scenario like this. But it's that time of the show wherein we ask, first get you a sense of what stocks could fall in and out of the F&O ban, if indeed there is a list like that. Then get in Darshan and Yatin to speak about what dealing rooms are recommending in the session today, and then some closing strategies. Firstly, stocks in or out of the ban, Navneet?
Just one stock, Neeraj, and it's been quite surprising. For the first time, it's been over a week for this new series. We've not had any stock into the F&O ban, but Jet Airways is the one which could enter into the ban period for Monday's session. And the reason also being yesterday, if you look at the total OI as a percentage of market-wide position limit was just about 94.88, and for a stock to enter, it has to breach the mark of 95%. In all likelihood, we've seen some bit of addition for the futures and some of the option strikes. So it looks like this could be the one, rather the first stock of the April series to enter into the F&O ban.
Okay. Watch out for Jet Airways. Remember, Jet and SpiceJet, a completely dichotomous move to what has happened with Interglobe Aviation the last few weeks, or this calendar at least. In the morning, Sumit had brought out this chart of how Interglobe Aviation has done in calendar year 18 versus SpiceJet and versus Jet Airways. A remarkable difference out there for the largest player. Still in the green today as well after starting off in the red. So interesting move for Interglobe Aviation today. SpiceJet has moved into the green for the last 3 odd months. It's lagged Interglobe Aviation in a meaningful way. Jet Airways anyways correcting a bit in trade. Sarvendra, the aviation names, do you trade any of them?
I think Jet being the most liquid one, that is where we have views and we trade that regularly. My sense is that right now the stock is slightly oversold, and there's a first sign of some positive divergence coming in. So this is purely a trading view along with the market. I think there could be a 15-20 point pop. The stock still trades below long-term averages. So just a 15-20 point pop that will take it close to 640 on spot is what I would say. If someone wants to trade, that is the trade to do. And if you are doing that trade, then probably you are keeping a 7-point stop loss. So either you are keeping a stop loss below 612 or 610. So you can choose, but I think 612, just below 612, you can put a stop loss and look for those trades on the long side till 650 or 640 odd.
Okay, stay on, gentlemen. Let's get a sense of what dealing rooms are recommending in the session today. Darshan and Yatin join in with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first.
Yeah, so some of the stocks that dealers are talking about. The first stock is Manappuram Finance. There's a buzz of a potential corporate announcement that could come in. The count has not done much today, but nevertheless, this is the first stock that's been spoken about. The next stock that dealers are talking about is Raymond. Again, coming in close to the 1,000 rupee level mark. Some of the HNIs are actively accumulating. Even day before, when the market did manage to correct significantly, Raymond was trading much higher. So Raymond is the second stock. And finally, the last stock that dealers are talking about is Make Money Organics. Some of the portfolio managers are accumulating this counter in the PMS. Not aggressive moves, but nevertheless, there seems to be some bit of accumulation that's happening at lower levels. But Yatin, what are you hearing?
Havells, that is one stock which is doing extremely well in trading today, almost 4% up on decent volumes, nearly 28 lakh shares trade in their cash segment. Dealers are recommending a buy today, sell tomorrow kind of a strategy here. Shakti pumps, and if you look at the last 15-20 minutes of trade, the stock has gone up to the roof, almost 16% up for that one. When we're talking about it, the stock was just 5% up, and a 10% move is what we saw in the last half an hour of trade. So on the back of fund action, dealers are indicating that Shakti Pumps is moving in trade and is expected to move further. And watch out for AI Engineering. That is also one stock wherein dealers are recommending a buy. There is a buzz of a block deal here. On the back of that buzz, dealers do indicate that there is some buying opportunity at lower levels as far as this stock is concerned.
All right, Yatin as well as Darshan for bringing that dealing room check with us. Sarvendra, before we let you go, any strategy for Monday that you have?
I think pharma names have turned up nicely. So if I have to do a BTST, I would probably pick a pharma name. I'll say that I'll pick Aurobindo. Overall, couple of names in the sector have definitely performed very well today, including Lupin. So I'll go with Aurobindo and say that look to trade for a target around 626, 627 for Monday, and keep a stop loss below 615, and take a long trade for Monday.
Manav, any closing strategies that you may have?
See, at the current levels from the auto packs, escorts look good. The stock has been in a very good uptrend, and also after a sideways consolidation, we have seen the stock breach the levels of 900 and is likely going to see a good close above 900 levels. So keep a stop loss of 900, expect high targets of 940. I also like Hindalco at the current levels. In fact, there is a complete bear trap that has taken place into the stock. We have seen series of decline in the stock from the highs of 284, and there has not been any sustained retracement rally into this. In fact, in last couple of trading sessions, the stock has has seen a good rebound from its oversold levels and has been holding the key support levels of 210. So keep a stop loss of 208. Can also have a short-term targets of 220, but I think eventually the stock can rally towards the levels of 230.35.
We'll watch out for that, and I'm sure over the course of the next week or a week and a half, we'll revisit this strategy with Manav to figure out what to do if it does rally up to 230, 235 odd. Manav and Sarvendra, gentlemen, many thanks for joining in today and giving us your strategies and your time as well. Appreciate that. Okay, those are our technical experts. Last 10 or 12 minutes of trade left. By the way, I must say, Piramal Enterprises has clocked in some phenomenal move today. They're, of course, starting off a couple of other businesses as well. But it's probably a